Hello friends, as discussed in our last video, somewhat bears managed to have some control over Nifty which they did most of the day, and accordingly we can see that a last close is in the red tick. Yes, loss is not very high in comparison to the expectation, but still at least giving some pause to the bullish momentum and trying to drag Nifty down itself is a big achievement for the next trading session as well, after what they tried to did in this big red candle day, that is on 3rd of February. Accordingly, if we try to analyze now daily chart, first of all let us try to understand the trend. Overall trend is in bullish, but somehow retracement from the previous to previous trading session high is giving some doubt over more upside. That can only be continued if that is cleared. Accordingly, we can consider that 17,800 is going to act as a strong resistance. If we consider the swing data, then as per swing, still overall momentum can be bullish because somehow bulls manage to have a safer level at a golden Fibonacci ratio, which is 17,425 near abouts. As soon as bears manage to give a close below that, we can consider that overall our downtrend has continued and we may see more downside levels. Accordingly, we can consider that our last trading session low is important, and if bears manage to give a close or a good hourly close, then we can expect more downside. Those who are having an access to 75 minutes data, they can consider 75 minutes data as well instead of 60 minutes. If we apply RSI on this structure, then we can consider that RSI and RSI crossover is yet to take place. So next 1 or 2 trading session can play an important role. So we shall not consider RSI as a major study at present. We can focus on Bollinger Band. Bollinger Band middle band acted as a resistance in last to last trading session, which we have already discussed. So somehow lower Bollinger Band can be the target for bears, but still that is really very far. So again our golden Fibonacci ratio near to 17,425 should be focused with a good cautionary approach, and this can happen that every bounce may get sold into and this structure may not happen. Instead, we can see moves like this, or it may extend up to this as well. Now let us check out what is our 1 hour chart trying to discuss or trying to say to us. 1 hour chart comparatively is having a bearish momentum. Last trading session low is near to our lower Bollinger Band. Overall Bollinger Band is trying to give us some diversion in the sense from upside momentum to now downside territory it may move in. Only the thing that one should give a caution about is a last trading session low, which might be near to 17,500 or near abouts. I am taking a leverage of 15 to 20 points. As such, I am referring a 1 hour chart. Now let us try to check out RSI for this structure. If we consider RSI, yes, downside is still 100% possible. In fact, if we try to study RSI, then still downside is possible up to 40 or near to 30 levels as well. So we can expect some downside. In fact, if we try carefully to study this structure, we can say that some trend line breakdown has already happened. If we consider trend line breakdown, then it is near to our previous trading session low, or you can consider near to our highs as well if we consider our overall structure. Overall structure is a kind of a channel pattern on a rising momentum, so somewhat downside of about 600 to 800 points cannot be ruled out. Please make a note, exact target may or may not come depending upon the market structure and supports in between. Whatever we have marked may act as a strong support going forward. So going forward, 17,470, which is a previous trading session low. Below that we can expect 17,250 near about. Below that we can consider 17,070 or 80 near about, and below that we can expect that 16,800 to 900 may act as a strong support. These are the major supports and not exact target as per the channel pattern, because channel pattern target is really very small. It is something like you can consider 400 to 500 points from the breakdown. If we want to find out a target for that, then target should be considered from this level near to 17,530 near about. So accordingly we can consider some 400 to 500 points on the downside, which may drag Nifty down to 17,100 to 17,200 near about levels. Now let us try to consider 15 minutes data. Then 15 minutes data, if we consider RSI, then RSI is under a no trade zone between 30 to 50. If we consider our Bollinger Band, then yes, whatever we discussed on the daily or hourly chart, this downtick has already been started. We can expect more downside as well in the coming days, but it all depends that how bears manage to bring it down. Already the gap between this particular zone is been filled, so we shall not consider this at what we have already been seen by the gap theory different times in our previous videos. Now let us try to check out option chain data. Then option chain data at present, we can consider that 17,500 is having a highest OI, but as such it is really very near to our last close. We have to consider our next immediate OI as well, which is near to 17,000. So somewhat this can be said that if 17,500 is broken, chances are very high that we may see 17,000 as a whole, but practically trading on that aspect or that thought process is really very difficult looking at the option chain data, because option chain data changes very fast and we have about 4 days to the expiry because we are studying a weekly data. So we can consider that below 17,500 we should be focusing on change in 17,400 PE strike price as well, and if at all in between 17,200 comes into a picture of top 5 OI during live market hours. Now if we consider call side data, then 17,800 is having a highest OI, which may act as a resistance. 18,500 is a next OI which may act as a resistance, and 18,000 is the next OI which may act as a resistance. So going forward, 17,800, which we have already confirmed by our chart study, may act as a strong resistance. By any chance, if bulls manage to lift Nifty up, then we can see that it may trigger into something like a short covering also. Whole and soul at present, resistance are stronger and supports are weaker. If we consider max pain data, then 17,550 is a max pain which is our to previous close nearby value, and that should be ignored as a whole. Reason being, we are having a highest OI near to that only. If we consider PCR data, then PCR at present is giving a hint as per the OI that still bears have got an upper hand in comparison to the bulls. Now if we consider PCR data as per the volume, then we can consider that bulls and bears are trying to bet neutral on the index as a whole, as we have PCR as per volume near to 1. So in the simple terms, For the next trading session, we can check out 17,500 OI and change in OI data along with 17,000 and nearby strike if we consider 17,400 in addition to 17,200 strike as well. Range at present, if we consider as per the OI, is practically bit small, so some range expansion is expected, and accordingly we are expecting that 17,500 OI may get shifted to 17,300 or 17,200 as a whole. Overall momentum is definitely on the downside, and we are expecting some more downside going forward. As a disciplined trader, and even if you are an intraday trader, one should at least wait till 9:30 and try to check the data and act accordingly. We hope this video is going to help you to prepare your trade plan and trade accordingly. See you soon with another video. Till then, stay safe, take care, bye bye.